Well, that's because there have been certain changes that have been announced by the market regulator SEBI regarding the multi-cap funds. So on Friday, SEBI announced that multi-cap funds, which were so far, managing the scheme as per the fund manager's discretion, would now need to be pretty balanced in terms of how they invest into large caps, mid caps and small cap stocks by having to allocate a minimum of 25% each. This would leave just about 25% to be managed at the fund manager's discretion. Now, this has to be complied with by the first week of Feb. So this caused a fair bit of, confusion in the market about, whether or not there would be a small cap rally which would be triggered by this. So SEBI clarified then on Sunday evening that, this is not the only option that mutual funds have or AMCs have. What they can do is that, they can either comply with these rules as is, or they could allow their unit holders to shift to another scheme. And my own sense is that they would probably do this without any sort of exit load being charged. And this would bring down the size of the scheme to a level that was manageable. Other than that, what mutual funds can do is that they can convert it, to another scheme, like say they could merge it with a large cap fund. Or they could convert it entirely, is that, leave the existing multi-cap as it is, change its structure to a large and mid-cap fund or a thematic fund. The mutual fund industry also wants to create this whole flexi-cap category for which they'll be making representations to SEBI as well. So now, how does this impact you as an investor in a multi-cap scheme? So let's go across. We've invited two guests to actually answer the queries that are being sent in to us by our viewers. Joining in, we have Kaustubh Belapurkar, Director of Fund Research at Morningstar Investment Advisor, and Feroze Azeez, Deputy CEO at Anand Rathi Private Wealth Management. So, gentlemen, good afternoon. Thanks very much to both of you for joining in. Feroze, let me come to you first because, we've spoken a fair bit over the weekend about what this means. Now, in theory, yes, it's, good for the category as a whole. But what does this mean, especially regarding the confusion, about what you could do, what you can't do? What does a unit holder do? And, I'll get in more queries later. But if you could begin by telling us, where does this leave a unit holder?
The unit holder has always been empowered. I think this change is for the unit holder, to my mind. I completely buy the point that SEBI needs to intervene when a category of funds behave like another category altogether. So I'm completely clear that the unit holders are empowered to take their decision after they understand the respective scheme's decision of the future course of action. Like you just mentioned, Sumaira, there are several alternatives. The unit holder can move out, the scheme can be recategorized, or there could be an allocation as per the new guideline. So irrespective, the unit holder is empowered, and I don't think his decision-making capability gets hampered anyway. And like you said, if there's a change in the scheme's structure or if it's getting merged, then all unit holders get a 1-month window without an exit load to go through a transition as well.
Okay, so that's also important for unit holders to note is that, it's not like it's going to be forced down your throat. You will have to vote on it. And after that, the AMC will also have to seek permission from SEBI to, sort of change the nature or the mandate of this scheme. So, there's nothing to be scared of right now in terms of waiting and watching. But Kaustubh, is that the right advice? Is wait and see how it pans out?
Yeah, absolutely. I mean, I really agree with what Feroze was just saying, that clearly right now, just wait and watch, see, the way the AMC decides to kind of manage their fund going forward. And is it going to be merged? What category is it going to? Is it going to remain status quo in terms of the category? Look at that change in the perspective of not just that fund, but how does that fund fit into your overall portfolio? And then take a very, very judicious decision. But just adding on to, what Feroze also earlier mentioned, I think one challenge I think we have to acknowledge that, which could creep up because of this is actually the concept of taxation that could come in if, investors have to redeem out of this or switch out of to another fund. I mean, that is the inadvertent impact of something like that, which could come in for, I'm not saying for all, but, for a certain set of investors.
Okay, now we have some queries that are coming in, so we'll try and address as many as we can. Dilip Rao has written to us on Twitter, and he says that is it possible that some AMCs will convert their multi-cap funds into large-cap funds? Is it even allowed? So yes, Dilip, it is allowed. Another Dilip has also written to us, Dilip Tahilyani, who wants to know, is this imposition by SEBI final and binding with no scope for discussion with the AMCs? Kaustubh, let me come to you first on this. There are a lot of doubts in people's minds about, which scheme will it change into, and there's no one-size-fits-all kind of an answer, right? Because eventually it's going to come down to what's the allocation of assets in your portfolio, right?
Yeah, absolutely. And, just to answer that specific question, where a fund can merge into, I think that will be dependent on, where that fund currently sits in the multi-cap space, because we know there are funds that have run with predominantly large cap mandates or large cap biases, but there are other funds who've kind of been in line with that 50-50 allocation, although there are a handful of them. So really it will depend on where, because we expect that the fund manager would want to maintain the mandate in a reasonable amount of continuity. So if he's been running a large cap bias, he would probably look to fit that into a category which is very close to that, rather than, kind of disrupting the entire style and moving to 25, 25, 25. So that's our reading. So that's what investors will need to kind of keep an eye on.
Feroze, I want to take this question forward because there has been a fair amount of debate now that there is almost no mutual fund category left where a fund manager can exercise their own mandate, right? I mean, there are so many restrictions in pretty much every category that what is the role left of a fund manager, right? This can easily be done by AI, for instance. Therefore, would you agree that this request of wanting a flexi cap is something that, SEBI should consider seriously? And is it valid from an investor's point of view, from a unit holder's point of view?
I think multi-cap should have done the job of flexi-cap. The regulator has intervened because over the last 3 years, you see the P's of small cap stocks went from 118 in August 2018 to as low as 30 in August 19, and it still remains at about 30 now. That's the small cap P. If this kind of P movement does not trigger any change in the allocation in small cap, it was 7% in 18, it was 7% in 19, it was 7% towards small cap in 20 as well. So if this kind of valuation change does not bring in any allocation difference, then the agility which was given to the fund manager in the multi-cap scheme has not been utilized. So what stops me believing that the flexi cap, which has the flexibility to prospectively, will be utilized? So point I'm trying to make is multi-cap is the category which gives you that flexibility. Having a 25% allocation to each still leaves 3 degrees of discretion in the fund manager. What does he do with the other 25, which is good enough? So you can have 50, 25, 25 in any of them, one. The second is he can change weightages in the stocks of the index. He can have different stocks than the index also, right? To a certain extent in the small cap, if not in the mid cap and large cap. So these 3 layers of discretion is good enough for somebody to exercise his right of his intellect and research to create alpha over the benchmark which is there. So I don't see this. This is very macro statement to my mind. I think fund managers have enough flexibility in stock picking, in weightages tweaking, and in small cap, you have another 4,000 stocks which you can actually categorize as small cap other than 250.
Got it. Feroze saying it as it is, but makes sense entirely. Feroze, is there a likelihood that this could be rolled back? That's what Dilip Tahilyani is asking us. That is this binding? Or is there scope for, there are going to be talks, but will this rule of multi-cap funds be rolled back at all?
I think it's logical enough to not be rolled back, especially when a scheme can be recategorized or merged. So if an asset management company already has a large cap scheme, nothing stops that asset management company to merge it, because you can't have 2 large cap schemes in an asset management company to cut the clutter that was done in 18. So to answer your question, Sumaira, my belief is it will not be rolled back, but there will be enough and more freedom given to the asset management companies to reclassify them or merge them. I think that would be the logical thing to do, but I'm sure asset management companies might request SEBI, and that's anybody's guess of what will transpire.
Okay, the other issue is that, we've been asking people to adopt the wait and watch approach, which is to see how their AMC reacts. So now people want to know what do we do in this time, or what should be a strategy, right? So Arshad Rashid has written to us. He says at the moment, the move to liquid is good as a pullback is likely due. Jaydeep has also written to us saying, should I go overweight on mid-cap and small-cap funds now to gain in the short term? Kaustubh, what would you reply to both these questions?
Yeah, I would clearly say that you need to stick to what your asset allocation mandate is in terms of as an investor. Do not, kind of time the market or play the market, because that can be pretty counterproductive. So if you think valuations are expensive, you might want to tactically reduce some exposure. But if you're an equity-heavy investor, you should be equity-heavy if you have a long-term horizon. Similarly, I don't want anyone to go overboard in mid and small caps just because there could be a potential rally if guys are hunting for mid and small caps, as some of the people in the street are expecting. So I would say stick to your asset allocation, wait to see how this fund under its new guise or mandate would fit into your portfolio, and then take a decision. Tactical is something that I would really avoid at this point of time.
All right, on that note, a quick break. There are more queries that will be answered. Kaustubh and Feroze, stay on with us. We'll be right back after this quick break. Hi, welcome back. You're watching MF Corner, and today we're talking about the changes to multi-cap funds and what they mean for you as a unit holder. Kaustubh Belapurkar of Morningstar Investment Advisor India and Feroze Azeez of Anand Rathi Private Wealth Management are answering the queries from our viewers live. Okay, so the next query comes in from Suresh Kumar Nair. He's also written to us on Twitter, and he talks about this whole concept of benchmarking. So he says that if we take the BSE NSE 500, approximately 80% are large caps, 15% are mid caps, and 5% are small caps by market cap. So how will multi-cap funds survive by following this new categorization? Quite fair. Kaustubh, SEBI has invited feedback on this whole issue of, benchmarking difficulties. How does it look to be resolved?
So I suspect there will be some sort of, maybe a custom benchmark that's made, because clearly, the viewer has a very pertinent point that when you look at the broader market indices, like the 500 stock index, there will always be a market cap weighted bias to always have a large cap exposure. So obviously it might not be a like-to-like comparison in that sense. So there'll probably be a consultation on kind of building a custom benchmark for this. But as an investor, you have to understand that even if you are holding this fund, which could be a 50, 25, 25 if you go for the highest large cap exposure. It will not be your portfolio allocation, right? It can't be the only fund in your portfolio. You have to, we keep talking about asset allocation. Very few investors would probably look to have a 50% allocation towards mid and small caps as a part of their entire portfolio. So you would obviously take a more graded exposure through various types of funds. This is only one tool of doing it, and you have to put and fit it into the whole gamut of your portfolio.
Okay. Feroze, is this, incorrect benchmarking or incorrect reflection in the benchmark also the reason that performance of active funds are suffering?
See, any benchmark created as per market cap is definitely going to be skewed towards the large stocks, be it the Nifty. Nifty has top 6 stocks with 50%. The other 44 is 50%. So that's a problem of having a benchmark which is going to be market cap driven. But I think benchmarking is one. And I think that like Kaustubh said, I completely agree that a specific benchmark could be created. But the job of a multi-cap is to move around the capitalizations because that's the decision which the investor has chosen to delegate to the fund manager, saying that you get into which market segment you wish to be. Of course, a 25% threshold for small caps seems larger. I'm sure that will be relooked. But to my mind, a new benchmark and a flexi cap fund for a person who has only one fund in the portfolio, like Kaustubh mentioned, this is a very big concern. Or for an HNI, it's not a problem because the all the funds are broken down into holdings, underlying holdings. But the point is, benchmarking is not the one big criteria. And I'm sure a customized benchmark and a small tweak in terms of this 25, 25, 25 is very surgical in nature. But a graded like small mid cap being at 20, 25 and small cap being at 15 could be a change in the SEBI circular at best.
Okay. I'll come back to this point in a bit because, we don't want to miss out any queries. So we have one question from Sarat Arora, and this is not particularly on multi-cap funds, but in funds in general, and this is a view that we've heard quite often, and there's some amount of angst that, they say, please ask why there is dismal performance by funds. The expense fees is going up and the NAV is going down. Saurabh Nima as well has written in on Twitter. He says, why are expense ratios increasing every now and then without giving performance? Most of the funds simply are not able to beat Nifty. So some of it, we have discussed about the difference between performance of active funds as against their benchmarks. But, Feroze, what would you say to people and this sharing this kind of angst that, they're having to pay a price but not getting the equivalent returns?
Yes, so one is cost, the other is value. So it's a balance between cost and value. I think it's very, very valid to have that angst or the disappointment if you're getting into active management. What I'd say is larger funds have a smaller expense ratio. So I think SEBI has brought in a lot of cost measures for sure. I think if larger funds, you will have a smaller expense ratio. Second is the rally over the last couple of years has been very narrow, right? Today you have reliance in Nifty to the extent of 14% and Sensex to the extent of 15%, but a fund is not permitted to have more than 10% in a specific stock. So this has not been a broad-based rally. Mid caps and small caps have seen correction starting the ILFS episode. From there on, from August 18 and September 18. So I think once the markets become a little more broader, every time when the markets rally very sharply, the fund managers find it difficult to beat. My strong belief is that alphas will return, but not for all fund managers, only for specific fund managers. So cherry picking becomes very, very critical out of the 457 equity funds which are there as an universe.
Kaustubh, this whole concept of size, now with this multi-cap changes, if a scheme gets merged into, say, an existing large cap, that again makes this, will it become too unwieldy? Is that also something that investors should watch out for?
So I would say in the large cap scheme of things, I'm not overtly worried necessarily about size because, these are fairly liquid, large capitalization companies. So that won't be so much of a concern. It will be a concern maybe in categories where, size can be a limiting factor, even where you start taking 30, 40% exposure to mid caps. Because when you become a 15, 20,000 crore fund, owning even 3% is a pretty significant chunk of holding that company. So I think that's where size can become a limiting factor. But, like I said, we'll just have to wait and watch how funds position themselves. But yes, you would want to keep an eye on, where it's going and what it's merging into.
Okay, Pankit Cheda has also written in. He says, is there an option to change the scheme mandate for AMCs? Yes, Pankit, this option is available. SEBI themselves have mentioned it. He goes on to say, is shifting from multi-cap to focus scheme? I guess he wants to know, is it possible? And do they require to take approval from unit holders? Yes, they absolutely do need to take approval from unit holders as well as from SEBI. So, Pankit, I hope that answers your query. But, Kaustubh, just to take this point forward about this whole changeover, now, the example that SEBI mentioned was that they would change, you could change to a scheme like a large cap given the current nature of the multi-cap schemes. But this, a suggestion that it could become a focus scheme, is it possible? Because that would also entail this, a similar amount of selling, right? You have to bring down your stocks to 30.
Yeah, that's right. So I would suspect that, at least the way I read the multi-cap space right now, I don't think too many will move to the focused category. At least that's my reading of the market, because it is a limiting factor. And if you're a very large size fund, that can become, if it's a large cap strategy, you can still do it. But I think probably the port of call would either be a large cap or a large and mid cap, or maybe, even the value category, because there are managers who run value strategies, even the large cap space. So, I'm obviously probably thinking a little aloud here, but I think, that's how these will have to be evaluated, but focus will become a little more sort of constrained. But if it's, again, a large cap focus strategy, it's probably a little easier to run, even if it's a larger size. But, it does increase the concentration risk a little more.
Okay, I've just gotten in a question from on Twitter from a handle called Be Mindful. And this is interesting because, this is something that I too was thinking about over the weekend. He asks, do fixed income funds also need such strict guidelines? So my own sense was that, this introduction of these stringent guidelines of being true to label for multi-cap funds would be a precursor for debt funds, where duration funds would need some guidelines in terms of the credit that they should be exposed to, and credit funds should need some guidelines, regarding the duration they could be exposed to. So some, bit of marrying the two in both. Feroze, is there a sense that that could be next?
Yes, I think definitely every fund category, the whole principle of categorization is that there's clarity in the minds of the investor, and there is objective of the investor and the mandate of the fund manager marrying each other. On the debt side, the only thing which I desire from a regulatory standpoint is looking beyond the ratings only. There are other measures of credit risk, especially over the last 2 years. There's so much credit risk fructification which has happened from AAA rated companies. There are other measures of ratings. If those are given as mandates, today it's a very straight-jacketed AAA this much, AA this much, and below unrated paper this much. If there are other variables which are introduced to manage credit risk, and the regulatory hold on that would create immense value from risk reduction standpoint for the debt category, to my mind.
Okay, Kaustubh, just to wind it up now, is there any sort of a review or study that you at Morningstar India have done to see that, if there are any multi-cap schemes which are especially vulnerable or at a especially beneficial standpoint because of these changes and because of the leeway now given in terms of switching, changing, conversion?
So I wouldn't say vulnerable, but I think, from the core standpoint of categorization, there are a lot of funds that, you've seen have managed large cap exposures over the last, many, many years in their strategy. So clearly they will have to take a call, and most likely, like I said, they'll probably recategorize or merge their funds. There are a handful of funds who are very close to, what the intended allocation is at, and I'm sure they'll be happy to stick to, something they've been doing for many years for their portfolios right now. So it's going to be, different for different asset managers, but I think a majority of them will have to look at either recategorizing, merging, or, realigning their portfolios. That's going to be an exercise that will be coming our way, over the next 3 or 4 months.
All right, Kaustubh, Feroze, thanks very much for joining in and for explaining this concept to our viewers. So really, that's where it comes down to now for the unit holders of multi-cap funds is that, don't be hasty in your approach. Wait and see how your own AMC is going to react to this, what announcement they make about, how things will shape up. They will take some time to make representations to SEBI, then again to decide between themselves what they will do with their multi-cap scheme. And there will be time given. Your vote will be sought. So there is really at the moment no need to panic. Thanks very much for watching. We hope that we've been helpful in making you understand this issue. Thanks very much.